G'day guys, Seeney here and welcome to another episode on the Australian Wealth channel. And what we're going to be doing in this video is we're going to be having a look at the process of getting an investment property and having a look at the inside of mine. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. It really helps to get these videos out to more people. So we're going to get straight into it. And in this particular video, we're going to be having a look at my investment property and what the process is of actually going and buying one if you've never done it before. So the first thing that you need to do when you're looking at getting an investment property is making sure that you have the capital to cover it. I feel like this is the most important one because you don't want to get stuck finding a great deal and then all of a sudden you haven't got the money to go through with the deal. So the most important thing is to be more than capitalized for the deal. So this not only means your own money, but on top of that, it also means that you have your pre-approval and you know how much that you can borrow from the bank. Once you have a set price, then it makes it a lot easier for you to go into deals and be really confident, because then at the end of the day, all that really matters after that is the bank's valuation of the property. And if those two things marry up, then you're going to be able to go through that deal, which is really important. So first thing is making sure you have at least 10% of the property, and that of course doesn't even include like the stamp duty and other taxes that go along with that. At absolute minimum, you probably want to make sure that you've got about 12 to 13% of the investment property that you're looking to get. Of course, you can put more money down and that means you got to make more cash flow. For myself personally, because I'm a bit younger, I'm 29, I'm looking at getting into more deals a little bit faster. So it makes more sense for us to get into more deals now rather than build up a bigger deposit and cash flow more. It's more important for us to get hold of that capital growth over time. So the most important thing is making sure that you're capitalized. Now, the second thing that's the most important is to make sure that you have really good research into the area that you're looking to buy. A lot of people can get destroyed by property because, using leverage and the bank's money to buy expensive buildings can be really damaging if you look at buying in the wrong area. Like we've seen so many examples of mining towns, for example, out in regional Queensland and Western Australia that have gone through massive booms because the mining's just been on and people have been trying to get in there. But the thing is, when a lot of that mining dries up, the property prices get slashed by up to 50% in some cases. So that's not a situation that you want to be in. So it's really important to be doing your research and making sure that there's good professional research that you've had access to. So things like population trends, are people moving to the area? What kind of people are moving to the area? Is it low income earners? Is it high income earners? Are there a lot of renters in the market? Is there a low vacancy rate for rentals? All of these things you need to take into account when you're looking at getting an investment property. Depending on what age you are, you need different strategies. So when you're younger, it's probably a good idea to be targeting more capital growth. So that's something that I'm personally doing, is targeting more capital growth at this point as opposed to getting rental yield. Even knowing our properties are cash flow positive, which I think is really important. It's much more important to be focusing on that capital growth to be growing fast. As you start to mature a bit more in your property portfolio, then it's wise to start paying down debt and getting much better cash flow, because that allows you to live on passive income basically. So of course, when it comes to property, you need to make your own decisions. I'm going to talk to you guys a little bit about the property that we have just about finished building. So it's under construction in southeast Queensland in the Redland Bay region. So this is an area that I think is fantastic for a number of different reasons. And the first one is government infrastructure. The government's spending over $1 billion in this particular area over the course of the next few years to build infrastructure, because they anticipate that this is a growth area. A lot of people are going to be moving to this area. And what we've seen in Australia in particular is a lot of people have left Sydney and they've left Melbourne to go to a more equitable climate and somewhere where their money goes a little bit further. And this is exactly the case in Brisbane. You know, the average cost of a home in Sydney is over $1 million, and in Brisbane, the average cost is around that 550 mark, which is roughly where our property price sits right now. So people are selling up from Sydney and then moving to Brisbane in droves. So what we've seen is an increase pretty recently in the cost of property, and I think that process is going to continue over time as well. So we've built a 4-bedroom, 2-bath house on a block up there, and we believe that we'll see capital growth of roughly 7% a year, give or take some. You know, obviously this isn't confirmed, you know, this needs to play out, but that's what we're targeting at the moment. So the approximate rental of this area is about $500 a week. I personally believe that that's going to continue to go up quite quickly over time, because there is very little supply of housing, not only in Brisbane, but just around Australia in general. You know, there's a vacancy rate in Redland Bay of about 2%, which is quite low. In some parts of Queensland, it's even lower. I think in Hervey Bay, it's 0.2%. So there's a lot of, I guess, competition for properties. So that's something that we're going to be looking to take advantage of in that particular market. And, you know, we might see the rents grow from, you know, 500 to 520, 530, who knows? And that's, of course, much better for the yield of the property. So at a 7% compound growth year over year, we're anticipating the property to go from roughly 550 to about 670 in 3 years, which will see us get a gain of about $150,000 roughly. And then, of course, over 5 years, that compounding in time, you know, we're expecting to see that property around $767,000. So obviously, this is all calculation based on the amount of infrastructure and people that are moving into the area. So this needs to play out, but this is what we're currently targeting for that particular property. So you can see that over time, it's a great way of generating a much higher net worth. And we'll be continuing to do this over a couple of properties. We're going to be looking around Australia and see where the best opportunities are. And I think that's what's really important, is to have a look where the best opportunities are. So in regards to this house, you know, it's a pretty sort of standard house that you would get for a family, which is what we wanted to do, was have something that a young family could be renting. So as I said, it has 4 bedrooms and it has 2 bathrooms. And of course it has quite a large living space, especially for the size of the block, which is fantastic. You know, when we were building our house down here in Sydney, I thought it was really important to have as much house as we could on the block, because you know it's great to have a bigger house and, you know, not so fussed with the backyard. So we've done something similar up here in Brisbane. I think a lot of people will be attracted to the size of the house that we've built on the block. You know, there's a lot less yard to maintain. So we're really excited about this one. We're going to be getting started on another one over the next couple of months, so stay tuned for that. Thank you guys so much for watching this video. Make sure you like and subscribe to the channel. It really helps to get these videos out to more people, and I will definitely keep you updated on the progress of our construction. It should be finished in the next couple of months. So thank you guys for watching, and we'll see you later.